Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Canoo, ticker symbol GOEV, which closed the week on last Friday, January 26th, at a price of 15.53 cents, being up just a tiny bit in the after hours at a price of 15.6 cents. And yeah, so I just wanted to do a follow-up on last Sunday's video. During that video, I had gone over all of these levels except for this one dashed line, which I'll go over in a second, and also something that has recently formed that might be kind of bullish. But I do think it is short-term bullish, so don't get too excited. And so basically what I had gone over in last week's video is that I expect price to go down to right around 12 cents based on this Fibonacci retracement. But, we haven't seen that yet. We did see price go down over the course of the week, but we did see this little spike. So I do want to go over that in more detail. But before I zoom in, I also wanted to point out that I do have an alert set right here for 13 cents, just in case 12 cents is not hit and we don't go precisely to this level. I will be alerted if price does drop by about 2.5 cents from the current price. So just something to keep in mind. But anyways, yeah, just zooming in on this to look at what happened over the past week. So the last video that I had made was following the trading day of Friday, January 19th. Monday, the start of the week, January 22nd, we did get this big green candle going up more than 12% on the day, closing at a price of 18.5 cents, which was also the high of the day. And so you can see I have that dashed line marked there because I think that's going to be a pretty key level. We want to start to see closes above that level, breaking above it. But we have not seen that yet. And we did see 4 red candles following that big green day and actually closing the week lower than last week's low. So that doesn't really look too good, but there are a couple things that do stand out as bullish that I will get to in just a second. And so if we do look at this big green candle, since it did have a close right at the high of the day, I think it's important to look at this on a shorter time frame. So here, looking at the 4-hour time frame, we can see that on that day, price did continue up in the after hours, going up to a high of, let's see, 19.5 cents, nearly getting to that downtrend, the top of that wedge. And then let's see, the following, after hours. So that would be this first one was following Monday, and then this after hours or pre-market was following Tuesday, the 23rd. We saw another test of the top of that channel, hitting a price of 19.02 cents. And also, I guess in the pre-market on the 24th, hitting a high of 19.01 cents. So breaking above the top of that channel, but just barely. And if we do look at this on the 1-hour time frame, we can see that there were a number of breaks of that downtrend, but no closes above it, or no clear closes above it. So that top of that channel does seem like it is acting as significant resistance. Or I said channel, I meant wedge. And so, if we do look at this, we really do want to be seeing closes during market hours above that. We have not seen that. We have just seen this drag down of price. So overall, that does not look very good. But one thing that does stand out to me as bullish, you might notice it. And actually, I'm noticing that Ed is not with us, so I'm going to pull him back. Sorry about that. And so one thing that you might notice is that in the RSI, we do see higher lows being formed, whereas with the price, we see lower lows being formed, and that is bullish divergence. So that does suggest we could see some up moves. However, I don't think that they're really going to be long-lived. I do think that a bullish move might just be a test of the top of the wedge, which could be coming to, like 17 cents, something like that. So really, we do want to see a close above 17 cents, or perhaps, 17.30, something like that. That would be, a breakout above the top of the wedge. But I don't think that we're going to see that. I do think we'll get rejected around 17 cents. because overall I do think that this does look bearish, putting in a lower close than last week's close. And, just putting in lower closes throughout the week. So I do think that going to 12 cents or 13 cents here is, seeming to be pretty likely. However, if we do switch over to the weekly candles, this inverted hammer could suggest that there is a reversal on the table. And I should note that this wedge is based on touch points from the weekly chart, weekly candles. So this could suggest that we will see a reversal next week and a breakout of this wedge. But I do think that's really going to need to we're going to need to see closes above 17 cents. So if we don't see that, I do think that we will continue down to 13 cents, if not 12. And one thing that does stand out as bearish about this inverted hammer candle is that it is red, so we did close the week lower than we began. Also, we began the week lower than last week's close. So, while this is a reversal signal, it is downwards as far as the moves over the course of the week. So I'm leaning more towards a continuation to the downside than I am leaning towards a breakout of this wedge. But if we do see closes on the 30th, that would be right around, a price of 17 cents. So if we can get a close above 17 cents or 17.1 cents on Tuesday or later in the week, that could definitely suggest a breakout of this wedge. So keep an eye out for that, but also prepare for, 13 or 12 cents, because those are still on the table, in my opinion. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.